Good morning. This is Larry McMillan with a stock market update on Monday, August 26th. So the market continues to push higher. It made a new high on this move that began on August 5th, made that new high on Friday. And it's within a very short distance now of the all-time highs at 56.70 or so. And it looks like it's going to break on through there. So the market has a lot of momentum. It's now getting pretty overbought, but overbought does not mean sell, so it can continue higher until actual sell signals are registered. You might say there's some support at Thursday's low. I'm not too sure about that, but a better level of support would be the gap left on August 15th down between about 54.60 and 5500. If it declined, though, below 53.70, that would be a negative turn of events. I don't think that's going to happen anytime soon, but that would be the level that I think would change the status of the SPX chart. Meanwhile, the McMillan volatility band buy signal is still in effect. That has a target of the +4 standard deviation band, which currently right now is just above 5,700. So that's still a ways up there. The equity-only put call ratios have finally rolled over to buy signals. It took them a while to do so, partly because they're 21-day moving averages, but also because there was still some pretty heavy put buying at the beginning of this rally. I'd say up through August 12th, we still had substantial put buying keeping these ratios inflated. But now they are rolling over to buy signals. Market breadth has been very positive in the last few weeks, and the breadth oscillators are on buy signals. They're in very overbought territory. But that's actually good news when the market's about to break out to a new all-time high. We did have a 90% update, meaning 90% of the issues were advancing, only 10% were declining. In terms of both issues and volume on Friday, depending which data set you're looking at. So, that's another positive indicator. And cumulative volume breadth, which is something else that we follow, made a new all-time high on Friday. That's typically an indication that SPX will do the same in short order. The VIX, before I talk about VIX, let's talk about new highs and new lows. That remains a very positive indicator as well. VIX has not sort of gotten with the program. It fell a lot from its peak there on August 5th, and that did generate a spike peak buy signal, and that buy signal is still in effect for another week or so. But it has not closed below its 200-day moving average, so that's like the one remaining sort of nagging negative aspect of the market right now. The construct of volatility derivatives has rolled over to a positive state with one possible exception, and that's that October VIX futures are very inflated. But that's due to the upcoming election, presidential election. And so I wouldn't say that's necessarily a market predictor of anything besides volatility. And even that, I'm not really quite sure why the election would cause the market to be volatile, but it normally does not. In any case, this is a pretty bullish set of indicators, and we'll continue to trade confirmed indicators, when they give signals. But we're not just going to sell because the market's overbought. Meanwhile, I invite you to visit our website, take a look at some of these newsletters that we have that cover these things on a daily basis. And we are going to be having a webinar on zero data expiration trading coming up right after Labor Day. So have a great week trading.